Okay, my one will be quite short and just focusing on the results that we've just published. If this thing will move. Yeah. Okay. All right. This is the income statement, which you've all seen in the papers this morning. The two issues that I really want to highlight, because I think most of the other things Mr. Segman spoke about, where he addressed the increase in the performance. But we just wanted to highlight to you that you'll see that in most of these slides we refer the 2010 results as restated, and that is because we have changed our accounting policy of revaluing fixed assets from revaluing fixed assets to historic cost basis. So if you look at the performance against 2010, the figures are restated, and then 2011, of course, has the new accounting policy as well. The line that we wanted to point out to you is the administration costs. You can see that it's actually gone up about 50%, but that is because it's got provisions in there for trade receivables, and also our ESOP provisions are in there as well, the employee share ownership scheme. And the way that works is that you actually do a mark-to-market on the share prices, and up to now the executive option strike prices was higher than what's in the market, and at the end of last year most of the options issued after the very high market prices in 2008 has now come in, well, what we call in the money, so you have to provide for that. So those are the two big items in there. Then you can see the foreign exchange losses. It's actually been very heavy. It's doubled what we suffered in 2010, and it remains one of the biggest cost risk factors for us. The rest of it is basically, I'll cover now in the following slides. Come, Caroline, come help me, please. Okay, if you look at that, in summary, it's just basically the movements on the income statement. The total turnover went up by 118%, but volumes went up by 51%. The rest is really price. The gross profit's gone up by 62%, and the EBITDA by 84%, 83.5, and the profit after tax by 71%. Earnings per share by the 83%, which is similar to the EBITDA. The figures on the top is basically what you saw on the income statement for 2011, and at the bottom what you saw for 2010. Okay. So if you look at basically again what we reported, the volumes, as I said, has moved up by that 52% from previous year. Net sales by the 118 that we saw, EBITDA by the 83 that we shown, and the profit after tax by the 71%. The following 4 slides are exactly the duplicate of these, so I won't dwell on them again. So they're just exactly the same. Okay, the earnings per share one, Mr. Segman covered as well. We last year we had 1.1 shilling 21 cents, and this year we've managed to achieve 2 shillings 22, an 83% increase, as you saw earlier on. Okay, this is the gross profit to net sales percentage. You can see that it's actually dropped from 2010. We achieved 7.5% in 2010, but in 2011 it's 5.5. The main factor in there is a provision that we had to provide for net realizable value of stocks mainly, and also, as Mr. Segman mentioned, the trading business volume actually increased a lot in 2011, but it brings with it thinner margins. So the margins dropped a little bit in 2011. The profit after tax margin also followed suit, because that's actual it actually just follows from the gross profit gross profit trend. You can see in the first half we had very, very strong performance, but the second half was a bit weaker, and that's why the net overall year performance was an average of 1.5%. Okay, this is the financing cost. I mentioned that it actually remains a big cost factor for us, and I would even say it's one of the biggest risk factors for us in our business. You can see in 2010, the foreign exchange losses, which is the dark maroon color, was half of what we suffered in 2011. And everybody knows what the whole country went through with with the rate of exchange, and mainly dollar to shilling, because that's the main currency we deal in. We did not only suffer the exchange losses in Kenya, because in all the countries that we trade in as well, we deal in 8 currencies across our group. So it's quite challenging to actually make sure that we're on top of this whole currency problem. This is just the reflection of what I showed earlier on. You can see that the exchange losses has just grown from 2010, which was basically half of what we suffered now in 2011. And then the rest of the figures, even the interest rates, you can see last year was half of what we, well, less than half with what we suffered. We're just making the banks totally rich. Okay, and then the dividend, Mr. Segman mentioned as well, we try and keep our policy to be between 40 and 45%. This year we paid an interim of 57 cents. We've approved of 43 cents dividend now, subject to AGM approval, of course. So the total dividend for this year is 1 shilling. Last year we only paid 1 dividend at the end of the year, and that was because we were at the mid-year status, awaiting our results of our M&A, potential M&A acquisition, when BP was selling their operations in 5 countries. And at mid-year, because of that potential acquisition, we didn't declare an interim dividend. But we tend to do 2 a year, as Mr. Segman said. So you can see we stuck to the 45% of profit after tax, and the dividend yield is about 10%. Okay, now I want to just quickly go through the market segments. We look at our business very much on these business segment lines. Each of our subsidiaries have most of these trading lines in their businesses, and they focus on this. So you can see we're in retail, of course, we're in the LPG gas, exports, supply and trading, the non-fuel business, which is what we're actually also focusing on in a big way, which is really our forecourt development. We've got lubricants, and a very nice niche market. Bitumen reseller business really goes hand in hand with the retail, aviation, and our commercial business with the fuel oil. So if you look at the volumes, comparing the 2 years, 2010 and 2011, you can see volume-wise, trading brings in a big chunk of the volume, both in 2010 and 2011. Retail is the second biggest segment. You can see contributed about 20% last year. And then this year, taking it together with the reseller, it's about another 25%. And then if you look at the commercial, last year contributed 14%. This year, you have to look at commercial together with fuel oil. Normally, we look at the business like that. So if you take that fuel oil and that commercial business, it again contributes the 13 odd percent that you saw here. It's 14% last year. So all in all, that's the kind of shape we have for our various business segments in our group. And this is the net sales, which is a similar reflection of the volumes. You can see again trading contributing a big chunk of the total net sales, and retail also a big chunk, and reseller as well, then followed by commercial. The niche markets that we have, like the LPG, bitumen, and lubricants, they're low value but good contributors to the bottom line. You'll have a look now. Okay, this is the GP contribution per sector. As you saw in the earlier graphs, trading contributed big volumes, but you can see GP-wise, it actually contribute because of the thin margins in that business segment. It contributes a little bit less. Commercial, big chunk there, and then of course retail again. Those are the three biggest. But you can also see LPG gas, where the volume was very small, the contribution to the GP line is actually substantial, close to 6% there, grown from 3% last year. Lubricants as well, of course, because they sort of the same sort of niche that we regard these two business, 4% and 5% last year. This is the profit after tax contribution, the bottom line contribution of the various business segments. This one I didn't do in a pie chart because the negatives actually distorts the figures. And I just want to point out as well, there's an error here. The trading contributed about close to 18%, and the error was the misallocation between this resale and retail. That was close to the 20% again. So just between that one and those two, there was an error, and I apologize for that. But you can see basically the commercial business contributed about 28%. And as I said earlier on, you have to look at our fuel oil and the commercial business here together. You can see it contributes around about those levels. The other business segments that I wanted to highlight to you is to look at exports. It contributes about 15% of our bottom line, and then trading about similar, 15 to 18%. And then the LPG gas, look at that big contribution from LPG, and really it's a good business segment for us. And aviation is really subject to what happens in the international prices and the way that market segment is priced. You can see last year didn't do too well bottom line wise. This year did much better, 5% to our bottom line. Just very quickly on the balance sheet, this was what was reflected in the papers. I won't dwell too much on it. It's just fairly straightforward. The issue that I wanted to just raise is the borrowings, because that one is a little bit okay, let me just go through these quickly. You can see here the shareholders' funds increased by 4% from 2010 to 2011. Market cap stayed flat, and that was what Mr. Segman also mentioned. That's a factor of the share price. It's really very undervalued, and that's why, despite the good performance that we had, it actually remains flat year on year. Our earnings per share, it's something that we showed earlier on, moved from 1.21 shillings to 2.22, and this is what I meant with the market price. Last year it was we closed 2010 with 10 shillings, and I think 2011 we closed with 9.95. So it really is quite a flat performance. You know, on our balance sheet, it's a little bit confusing because you see the variation in borrowings and the level of stock quite dramatic. What you should look at when you look at our borrowings, and this is operating capital, it mainly is for financing inventories. So if you look at our balance sheet, and the three figures you should always look at together, as I mentioned at our last investor conference, is the cash, the borrowings, and the payables. And why payables is because when we're importing a cargo and we haven't yet paid the LC, or it's not yet due and payable, it still is a provision in there. So the inventory liability has been raised already there. So if you take the cash, the borrowings, and the payables, you get that scenario. So you see in 2009, the net figure was about 15 billion, and that was used to finance mostly inventory, and the balance, of course, is other working capital. But just I wanted to just highlight that the level of borrowings is always sort of in tandem with the level of inventory. So you see in 2009, it was like that. In 2010, if you add up the cash and the borrowings and the payables, it comes to that figure, which again finances the level of inventory. In 2011, we had very high levels of inventories, mainly because we had a lot of cargoes again stuck at Mombasa, not able to discharge on time, so those all spilled into January. And you can see our level of borrowings at the end of December 2011. Again, if you add the cash, the borrowings and the accruals, not all of it, of course, was in borrowings. You can see how high the payables was. We were accruing all the cargoes before they discharge and be payable. You can see it actually financed the high level of inventory with the level of borrowings. And then that, again, is just the other working capital. Okay, thanks. Thank you.